Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, August 16th, 2024. S&P 500 currently sitting at 55.49. I'm David Zarling. I'm here with Ian McMillan. I paused Ian because I was going to throw a nickname, but I thought better of it. It's good to be back on here with you.
Was it an inappropriate nickname?
No, I don't mean it from like it was going to be derogatory. It's just I had like three different things going through my head. And I'm like, I already stuttered over S&P 500. I'm feeling a little underneath the weather. Didn't know if I should throw something out there. So sorry, no nickname this week. I think everybody will get over it.
Under the weather. Hey, still got a big week for you. Get your second oldest, Dan.
Yeah, off to college.
Got two out, two still in the nest.
Mm-hmm.
That's big. That's a big.
You're gonna love it, Ian.
Congrats.
I know. You just celebrate a birthday in your house
too. Yeah, we had 5 and 1. Yeah,
just crazy. Enjoy every moment, man. It goes fast.
Honor starts big boy school on Tuesday.
Ooh-wee.
Going to kindergarten.
Oh,
so
awesome.
Today is his last day of daycare. So
yeah, and you know what's crazy, Ian, is like growing up as a dad, and that's an appropriate phrase, I think. Growing up as a dad.
Very proud.
That there's phases where I'm like, your kids are young, they'll sit with you by the couch, you snuggle up, you might read a book, you might play a game together, you go in the backyard, you kiss them goodnight and tuck them in, and you're like, man, I never want this phase to end. But I'm telling you, like the next phases that are coming, they're just different chapters. Like that chapter's amazing. The chapter you're in right now is an amazing chapter of the book. But the next chapters that are coming are just going to be as amazing. Like the inquisitive adult conversations about how do things work and how do this, what do you think about this relationship and life? You're just going to cherish every bit. And this college phase for me is, while I'll miss my daughter, of course, I'm so excited for her to be like starting to really gain that independence. And I don't know, like every phase, it's almost as if God made parenthood to be able to enjoy these different phases. Cause I no longer have that sense of like, I just don't want it to change.
She'll be an athlete in college, which is a totally like different and added, kind of perspective and thing to live through for her, for y'all.
Yep, for sure. And there's all sorts of things that come with that, right? Your number one priority at school is to get good grades. And then I would argue, meet new people and then sports. And so it'll be interesting. She's kind of the top dog for her team in high school. It'll be interesting to see how it shakes out in college, but I'm proud of her. She's made it her sport, and we'll see what the Lord does with it. He's definitely given her gifts, and now you just kind of hand it over and you kind of watch, and you love her regardless of the outcome because she's your daughter and she's a redeemed child of God. But all I'm here to say is like, it's all there. I'm sure there's phases you're in right now where you're like, man, I don't want this to change. But when it does change, you're like, I like this new chapter. And I don't, like somewhere around 6th grade, 5th grade, somewhere in there, I would say, like 10-year-old is huge. Then like this middle school age is huge.
Oh, we had
high school is
a procedure done. So Connor will stay 5 forever. It's perfect. Also, the big question is, is your daughter aware that we're above 5,400?
Yeah, she
brought it up, didn't she?
Yeah, she when we were saying our goodbyes,
I knew she brought it up. She's like, Dad, you're still bullish, right? And I was like, yeah, I guess I'm bullish again.
Exactly. Yeah, she was just like, hey, I know we're going to miss our time together at home, but if we had to exchange that for 5,400, we would do it, right?
And you both nodded in silence.
Yep.
A little tear fell from your eye, and you're like,
she actually set me in my place. Ava said, there's rising 200-day moving averages everywhere.
And you're like, you're right. I
You're right.
shouldn't be stressed.
Yeah. Thank you for
I
providing that.
should have expected to. I guess we're still in a V bottom graze because again,
Ooh,
we're not to new all time highs yet. So it's kind of hard to call this bottom. But yeah, again, I said we're back above the island.
yeah.
So
The island is 5,400.
intermediate, long term. I mean, long term, like you said, rising 200 day. We're still above 4,800, which we haven't gotten close to yet. I don't want to jinx that, but a harsh drop, especially going, 2 Fridays ago, 2 Mondays ago, and now we've had a what 6? Are we gonna have a 7 day winning streak here? Seven
Yeah.
straight green candles.
Yeah, I think you're on it. And I mean, from the July high to the mid-August low, we're talking about almost 10%, just shy of it on using the S&P 500. Again, something we've talked about on this podcast before is that's perfectly normal behavior. And it's it's not like we're out of the woods in the sense of we haven't recorded a new higher high, but we definitely got a price reaction here, and it's perfectly normal with the context of an uptrend. Like markets consistently have drawdowns during the year of 5 to 10% frequently, and sometimes as much as 15%. And so volatility is the premium we pay to be involved with an uptrend. When we have uptrending markets and you have an average return of a market that's 9%, but your average drawdown in the year is minus 10, that's a painful exchange, right? You have to
It
sit
is.
through minus 10 in order to earn plus 9 by the end. And August is a perfect example of this. And I will say,
Oh, that part hurts though.
yeah, it does. It does. Especially if you think in nominal terms, if you think in terms of dollar terms rather than
That's
percentage terms, 10% for some is way more painful than others.
nominal
Everything is
terms
relative.
is I think that's a big behavioral finance. We talk about biases and things, but dollar terms on a statement, logging into your account have a massive impact on psychology.
Absolutely.
And yeah, losing 10% in your 20s is, a bigger deal than losing 10% in your 60s.
It can be.
It can
It can
be.
be. At the same time, I would say there's 60-year-olds that deal with a balance size that a 10% move in dollar terms is larger than any 1 year of salary they ever earned.
So and there's where the nominal thing becomes so tough.
Exactly. It's an education process. It's living a percentage life rather
Those
than a nominal life,
big
understanding.
big numbers.
Yeah.
And you want to put them into the context of, gosh, well, my second job, I was making $30,000, and now you're losing 120,000 on a common market
Yeah.
correction and an uptrend. That is
Yeah.
a huge. That can take a lot of getting used to.
Right. And I'm not here to say that feeling isn't natural. Here
Very
to
natural.
restate the environment from a different perspective, right? How many times in life is a different perspective provided to us and you have that aha moment? In investing, the nominal to percentage viewpoint is that aha moment of, oh, this is perfectly normal because we need to be thinking about this in percentage terms.
Yeah, I've been through this before. I've been through this multiple times. My 401k has been through this. I've been through this with my advisor. This is no different than, and Ian, great for you that your wealth has grown to that amount that it is a kind of shocking there. And I think it's like you said, I think the best way to view it is super natural. Dollar amounts are dollar amounts, and that it can be intimidating.
It can be. It can be, but once we normalize everything, once we normalize the price behavior of a market using percentage terms, using logarithmic rather than arithmetic calculations, then we get an understanding of, oh, this is normal type turbulence.
Mm-hmm. I did lose X on this correction, but actually, oh wow, I still outperformed the S&P.
Right. Correct. These are important perspectives to have. And it's also hard, right? If you don't use technical analysis, the study of supply and demand, and use charts, that the minus 10% that happened in the first part of August is normal in an uptrend. And I want to stress that we're in an uptrend versus the minus 10% that happens once a downtrend has been established.
Yeah, in August 2022.
Right. Correct. Different environment, like volatility to the downside. We should absolutely respect that. We should absolutely have a process for that. It's why we use tools such as the supporter of this podcast, the Adaptive Select ETF, which uses trend identification regimes
Good for them.
to identify trends. And the Adaptive Select, say that?
I
Say it
think
again?
onto something.
Yeah. And so the Adaptive Select ETF, which is listed on the NYSE under ticker ADPV, helps investors access two of the most prevalent factors in markets: momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving short term treasury bills and cash during long term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpv.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors LLC. And so here we have an uptrend that's on our hands. It seems to be reconfirming itself. Again, you never know the end of a trend in real time.
You
And
don't?
that's the hard part about markets, is they never ring the bell. I wish they did, Ian.
Ali, I would love that. I'd be filthy rich if they did. But yeah, we broke below 5,400. I think that was a pretty fair line in the sand. We talked about that with clients, I believe, in the client newsletter. And you draw your line and and it is what it is. And so you say, okay, if we're going to be back above 5,400, I definitely want to be involved again. We did that on, I think it was Tuesday. Tuesday, we captured 4,400. And so I love it because it was a decision that was made 2 weeks ago, Dave. That's why I love it.
It's kind of like baseball, right? You're sitting 2-0. He's throwing you two balls. If he throws one in your favorite spot, you swing. It's a decision that's made pre-pitch.
It is.
If
And
you're
you live with
if
it. Yeah.
if you're sitting under center as a quarterback and you've got 3rd and 3, it's a run play. But if you got linebackers sitting in the A and B gaps, okay, maybe I'm just gonna call an audible here and just throw a quickie to the tight end. No problem. So like, these are rules that are set in advance, and so 5,400 being one of those rules, we can use price to our advantage and identify, okay, maybe sellers don't have control of this market if we're back above 5,400. That's kind of what you're saying, yes?
No. And again, another aggressive V-buy. I mean, similar to what we saw in October 2023, like Halloween. Very strong move. Now we actually did dip below a 200-day there for a bit. Same with what we saw in March 2023. And what we saw, I mean, obviously we talk about COVID, but the demand, really, I mean, we're kind of going on 2 years here of demand really stepping in pretty quickly, pretty aggressively every time we get a sell-off.
And that's a great point, because this is a really important time to highlight for our listeners that we're talking about economics 101, supply and demand. It's the auctioning process, right? So if I can, I'm going to do my best to paint a picture here, Ian. Bear with me. I'm not giving nicknames today, so I'm going to tell stories. So you're at a farmer's market. You're selling watermelon. You know I was going to use watermelon because
I love this.
yeah, it's what you got. You start selling them for $10 a piece,
Okay.
and ton of demand. You're running low. you start raising the price to $50, and there's some demand there, but you're like, oh, I'm not selling as many. The crowd's kind of dissipating, so I'm going to drop it to 20, and the crowd rushes back. We continue to see the buyers show up earlier and earlier at higher prices for stocks.
Higher lows, yeah.
That's, I mean, and so as an example, from you call it late October lows through the late July, so late October 23 to late or mid July 2024, when we look at the exchange between buyers and sellers, what we would call a volume profile and the
Okay.
point of control, we call this the point of control. From that, in that time frame, the point of control was at 45.66. So the majority of volume interaction on price was at 45.66.
I see that.
Because of what's just taken place in August, we've now pulled up the entire auction process where the point of control is now at 52.50-ish. So the
People are
market,
willing to pay more.
yes, the market participants have confirmed that they are willing to pay more for stocks using the S&P 500. And so here, this August, while painful on nominal terms, normal in percentage terms, is also great for confirming, yeah, the buyers were real. The
I mean,
buyers were real before.
technically, I think, and this is according to, I think Dietrich says we average 1.1 10% corrections a year. We from intraday high to intraday low. I mean, we got close.
Barely, right?
I mean,
I don't think we got 10%, did we?
What? No, we didn't. It was 9.74.
Yeah.
Yeah, use a buffer there or whatever, but we didn't. I mean, we technically didn't even get a 10%. So this is not going to show up on those. Like, yeah, it's just it's a strong market out there. It is.
Well, and so we know that August and September are seasonally weak. We know that we have a presidential race that is a non-traditional approach. We just had the price response that we had. Ian and I are not saying it's smooth sailing from here.
And so I'll put an asterisk. NASDAQ had basically 16%.
Yeah. And so while we've made a nice recovery, we're not at all-time highs. So we're at an in-between stage, and we could be building out a range. So it's not like volatility is over. We're not here saying, well, the coast is clear, like it's smooth sailing. We don't have to worry about anything. There could still be some volatility in here. There could still be a range that's built to confirm this auctioning process. But the event that just took place in beginning of August was actually very beneficial from the market from a structural standpoint on proving where the buyers exist. And here we have proof that there seems to be a point of control or value near 52.50 that's notable. We have a moving average using S&P futures that's near 5100. We have prior highs that sit at 520. We have a prior low from April that sits at 5,000. Now we're starting to really define the levels of engagement for the remainder of the year. That's great. Like, I don't know how you do that as a fundamentalist. I don't know how you do that with GDP. I don't know how you do that with an earnings report. I don't know how you do that with a balance sheet.
Now you do with the Shiller Cape. Every time the Shiller Cape ratio gets 15, 16, that's when you buy. Now, Dave, there's you might miss out on a 200% run in the S&P, but we want to get good value. We want to invest when the Shiller Cape is low.
Oh, that's so funny.
Or all these things, price to book, all this stuff. Who cares?
Right. And it's this balancing act of delivery.
I've never had a client that asked me, why are we so aggressively long when the overall market PE ratio is so high? Never had that happen.
Yeah. And I would say too that when you look at historical price levels of the S&P 500 and its associated price to earnings, its PE ratio, if you were to use the rule of buy when the PE is low and sell when it is high, you would have never gotten back in the market in '08 and '09
Oh, I believe that.
because
Yeah.
because your PE ratios were all out of whack. And same thing on the flip side, you might have been out in '06 and owned all the way through '08. It's you just can't use fundamentals in a vacuum. And that the interesting thing that people seem to forget is that price includes the opinion on PE from investors. Price includes the opinion on GDP, CPI, all your letter soup that you can come up with on fundamental metrics, the opinion on those things by the smartest people on the planet managing billions and trillions of dollars is included in price. And even the irrational ones, the ones who sell because
The
they don't like
generous.
the taste of something, or they're selling it because they just want to remodel their kitchen, which that's not a fundamental opinion. That's just I need cash
I've
now.
heard when insiders and C-suite executives sell stock, it's only because they clearly know that the stock has gone too far. It could never be because they have a personal life and they have things that they
Right.
want to pay for.
Yeah, a C-suite executive could never possibly sell shares because they just bought a lake house.
Nope. No, it's
Couldn't
because
possibly.
they know earnings are going down. That's why. And whenever they
Right.
tell people, it's always like 1% of their total like shareholding.
Right.
Oh, my kid had tuition because it's August.
Yep.
Like, I mean,
Tuition.
the things that people come up with to sell content or write an article, or it's all, as you said, it's all taken care of. And when there's trillions of dollars thrown around, I mean, hourly at this point, probably. I mean, all of that gets scooped in, and it is a needle drop, but or a drop in the bucket, and people want to make something out of it. It's
And everything's in context with that one. Is the CEO in twilight years? Is the CEO new? Is the CEO just unlocked a
yeah,
share value because of performance?
was in a 3-year lockup, and he had to check 8 boxes, and he checked all of them. And yeah, maybe he
Right.
deserves to have a $10 million to exercise his options at $10 million payout
Right.
and buy a third. Like, it is what it is.
It is. And to me, the whole like insider selling, I'd be more I'm I'm speaking off the cuff here, but I'd be more inclined to value when is the insider buying.
And I think All Star Charts does a good job with that.
Yeah, like if you have discretionary income as a CEO and you're buying, basically invigorating the credit stance of the company because you believe in it, that speaks more volumes to when you're selling. Because, like you said, selling could be that's part of your comp. There's compensation packages out there where you're getting de minimis amounts as salary, and the majority of your comp is shares, or like you said, life events, or you've unlocked a certain amount because you've created so much shareholder value. I get the insider selling. I get why it's sexy to talk about, but insider buying, I think that's more valuable to me,
I agree, especially when it's a founder-owned company.
for sure. Yeah, for
I think
sure.
there's an ETF out there that it owns companies that are still like either the founder is still the CEO or owns a majority stake.
Oh, okay.
And I think it's outperformed the market,
Yeah, I mean,
which I believe. I mean, I get that.
I wonder what its ticker is.
We'll have to look at
Founder.
market ball.
Yeah, I
So
mean,
let me get
founder
your
is.
opinion. We've had a lot of market volatility. We'll
Yes.
use that simple phrase.
Yep.
A lot of shakeouts, a lot of, even in relationships. So we can talk about absolute charts, but even in relative charts, we've had some big moves. So I'm big on, I feel like for years I've really started with the precipice of growth versus value.
Mm.
So, right, because you can really in a top down approach, for me it starts with growth versus value. I'm not saying it's always that simple. I'm not saying there's times where technology and financials are both outperforming or underperforming or whatever. But so do you have a change of opinion based on the last, we'll call it 4 weeks, and coming off a pretty heavy growth period, I would say. I think that's a fair statement to make.
Yeah, what I'm gonna say next probably is gonna sound like a cop out, but I'll put it this way. I think there's something developing that's a both and. So I'll use RPG versus RPV. So
Your growth per
pure,
value.
pure value. So false breakout in June/July, where we had this really nice breakout. It looked like it was just going to be a growth train. And again, you can't take all these things in a vacuum, right? Because you could use SPY G versus SPY V, those type of things. However, some other proxies that you could use for growth versus value, and I'll have to see whether you agree with this, is if I take tech versus financials, XLK versus XLF, right? That we could argue that that's a growth versus value proxy.
Sure.
We're still sitting in a range that goes back to mid 2023 in that relationship. And then when you do the homework, which our adaptive team does so well, you and Kevin and Dan, on going through each what we call workbooks and digging into each sector on a weekly basis and digging down into what's happening in that sector, it's really interesting to see that while tech hasn't kicked the bucket per se, meaning like it's done, and there still could be some opportunity there, that there are things percolating underneath the surface in something like financials. And so I'm giving a long-winded, potentially could be viewed as a cop-out statement where it's not like growth is over, but there might be some really tremendous opportunities in value.
So I think that is a great summary. And two things I would like to add.
Absolutely.
So we talked about SPYG, SPYV. So that's going to get your large cap view. So if we look at mid cap growth versus mid cap value,
Okay.
MDYG versus MDYV never got a breakout. And if we look at small cap growth versus value, so that's IWO versus IWN,
I like this.
MC never got a breakout.
So you're saying
it was
based
there
on
in your Mag 7, the growth thing was there. It never really appeared and I mean, let's look at small cap growth, small cap value. I mean, we're flat since April 2023. Technically, small cap values outperformed since the broad market lows.
right.
I mean, the growth versus value, I think you put it great. It really depends what you're looking at. And if you're looking at outside of large cap, growth really hasn't advanced as far as you think it has.
Yeah. Outside the Mag 7.
Outside the Mag 7. And I think it goes back to what we've talked about for a few weeks. Financials have really held up well. And they're, again, the top sector today. But still above, it's a flat relative 200-day. Still above a 200-day, relative 200-day. They've held up well compared to other quote-unquote value. They've held up better than materials, held up better than industrials, energy. So I think financials are kind of your canary in the coal mine, so to speak. There being some potential second half strength and value.
Yeah, for sure. I mean, it's a fancy word market. There, you could argue there's some bifurcation. You still have your Magnificent Seven, although they've pulled back, and some of those on a relative basis have broken down. Sounds a little harsh, but they're below some important horizontal levels. Then you have your rest of tech, and then you compare that versus your value areas, and then you include things like biotech. It's not it's what I would call outside the index level, meaning there's opportunity that's happening outside the index level, and that's good. That's a good characteristic to have, right? Because your index is basically your average return. You have your extremes to the positive, extremes to the negative, the things that sit in between, and that gives you your average. There's opportunity that's happening in areas. So you bring up like small cap financials or like financials in general.
Mm-hmm.
How bad is the market? How bad is the market if financials are doing fine? How bad is the market if biotech, one of the smaller areas of the market, is doing fine? So
Yeah.
that's the type of analysis that we have to do as market historians and market analysts is where is the strength? And we're seeing strength in areas that aren't pre-event. They aren't like these things that you go, I think we got some trouble here. Right? If we were selling off financials, if we were de-risking and getting out of biotechs, that would be a little bit okay, we got some issues here. And maybe that's the case 6 to 12 months from now, I don't know, but it isn't right now. And so I think we're both saying the same thing, which is there's some things here happening in value, and especially if we're talking about financials, if they're doing well, how could the rest of the market be that much trouble?
And I'm ready for value. I think there's a lot of people that like some things to choose from. Not that breadth hasn't gotten better. It's certainly better this year than it was in 2013. But we talk about large cap growth and large cap value, and mid cap growth and mid cap value, and small cap growth and small cap value. Now, the other side of that, if you're gonna, whether this is personally, professionally, if your benchmark is the S&P, well, then, small cap value and small cap growth being in line is cool. But if small cap or if large cap growth and large cap value is going to be your big mover, right? That's going to have a way bigger impact on your benchmark, or quote unquote, what the broad market is doing, which maybe we should change. Maybe we should lead the charge, Dave, on the concept of the broad market.
Okay, I'm listening.
We talk about the broad market, but it's really not the broad market.
Oh, okay. I think I know where you're going with this.
And so, right, you're held accountable. I think all people should be held accountable to some type of benchmark. But the broad market has, like, over the last decade, has just evolved into the S&P.
Well, yes. Yeah, I think I know where you're going with this. That's the popular benchmark.
And I'm not saying it's not wrong. I'm not saying it's not a fair. I'm not saying it's not fair. But is the actual term broad market applicable to the S&P 500?
Yeah, I think that's fair because
What?
you're simply stating the S&P 500 as we know it, which is a cap weighted version, which is a momentum product. So the larger get larger. Whereas if you look at like an equal weight, and that's still equal weight S&P 500, still only 500 stocks.
Yeah, and you move yourself down the market cap spectrum.
Right.
And you're like, yeah, value actually, when we look at the other 4,500s, when we look at the other 70, 80% of the market, value's not up well. When we look, but then there's this tiny little 500 out of, let's call it 5,000. I don't think we used to have Wilshire 5,000. I don't think we have 5,000 still. Maybe like in the mid 4,000s.
Yeah, we're off the 5,000 mark, which that's a whole nother discussion. Probably it's a whole nother podcast about credit markets and sentiment.
Yeah.
We have
a lot fewer stocks than we had 25 years ago. I'll tell you that.
So right now, the Wilshire 5,000 is 3,403 stocks currently.
There you go.
And it used to be over 5,000. Now that, again, that's a sentiment statement based on how do we raise capital as a company? Are we going to the capital markets, or are we raising bonds? Are we doing a bond placement? So
Or private
back to
debt,
your
right? We
point,
can just give a private equity company
yeah, yep. Which that's probably all changing. I mean, my
option.
guess is if you're rising rate environment, capital markets become a lot more appealing environment to raise capital. Go ahead down your
Well, it's
pathway
not.
of
We use the N500 stock. It's certainly better than 30 in the Dow, and it's certainly better than 100 in the Nasdaq. Is heavy in tech,
right.
but it's and well, small caps. So there's 2,000 small caps, but there's screw up.
Mm-hmm.
So we talk about this 500 stocks being the broad market, and speaking, it's the furthest thing it's the furthest period it's ever been from representing a broad market.
Right. Yes, correct. Because it's so tilted towards large cap and momentum, right? The big get bigger,
Momentum, yeah.
and therefore it's tilted a certain direction that you can often lose sight that there might be opportunity on the other side of that spectrum. And when you look at, and to your point, I think what you're slamming home here is you look at something like RSP equal weight S&P 500 or even something like EQAL equal weight Russell 1000. And again, we're not even talking about 3000 stocks. We're just talking about those. There's still opportunity here. We're talking about two measurements where we just cleared all-time highs, have staged a sideways range and a retest in something like RSP equal weight S&P and EQAL, which still hasn't cleared all-time highs yet, that the other stocks in the universe outside the S&P 500 or are not captured the same way representatively. There's tremendous opportunity out there.
Yes.
Is that
I
is that fair? Is that a fair
100%
statement to what you're saying?
100% agree. There's opportunity out there, but this microcosm of and we're gonna have to unravel what is I'd say the growth thing really kicked in, and you can pull up a chart and look at this. Pull up an SPYG, SPYV chart, and long term, pull up a weekly chart for you at home. And so I'd say for sure financial value just got crushed in 08, 09 because of the housing and financials. But I'd say 2015, 2016 is when and maybe a better example of this would be tech versus SPX, XLK versus SPX. Probably a better view of what the point I'm trying to make here. But 2016, 27, we're really into 7, 8 years here of extreme growth outperformance. Extreme growth outperformance. Just look at the right side of this relationship.
Right. Yep.
It's gone down. It's gone up as quick now. 2000 through 03 moved fast, but we've rebuilt the entire thing. And it's going to be a weird blip if we do get away. And I think you're starting to see the cracks. You're seeing your Amazons underperform. You're seeing I shouldn't put Microsoft in this category. You're seeing your Apples underperform. We can talk about Apple, but we want to talk about Apple on over the last 4 years. Not
Yeah.
that, on a relative basis, you could have been in the SPY and done just as well. And so you're starting to kind of see this slow down. And God forbid we move back to buying regional banks, Dave.
Well,
Or
and it's an interesting. Everything you're highlighting is so interesting because you're talking about these household names of Apple, Google, Microsoft, Amazon, Meta, Netflix. The one in there that I still am not sure is a household name that was a little bit of a clue during this pullback that things were still
I
okay.
know what you're going to say. It starts with an N.
NVIDIA.
Yep.
Yeah.
Yeah.
Yeah. Like when you look at so when you have a market cycle advance, as technicians, we should be looking at, okay, what led us out of that bottom in late 22, early 23? Well, NVIDIA was one. Eli Lilly was another one. There's several others that we monitor internally that I'm not going to get into. But when you look at Nvidia and Eli Lilly, still held up really well during this correction, and that's your clue. Like, is this cycle leg over? Now, we're talking about two different durations here because it is important to highlight what you're highlighting, which is Apple, which has been a darling since the secular bottom way back. Like, I'm not talking about 22, 23. I'm talking well over a decade. Apple's been the leader. That's now moving sideways is information and worth paying attention to. Same thing with Microsoft and Google and Meta and Amazon, right? Because Amazon is still on a relative basis not performing all that well. But you have an area like semiconductors, which is doing well. And this gets back to that bifurcation, that differentiation on what's going on within the market. So your leaders out of the, go ahead.
Similar are doing well.
Yeah, like semiconductors are still holding up. So if we're buying semiconductors, financials, and biotech, how bad is this market?
Gold,
Yeah.
all-time highs.
I mean,
Bitcoin, not all-time highs. Bitcoin needs, I don't know. We'll see. Bitcoin not very high on my list at the moment. Could be different.
wouldn't that be something, Ian, if when we look back at history and we observe Bitcoin ETFs were approved in early 2024, and that from that point forward, you saw gold outperform Bitcoin?
Yeah.
So it's worth paying attention to. I mean, I'm not saying that that's what's going to happen. I mean, I'm not anti Bitcoin. I'm not anti gold. I'm just anti really strong opinions about things that you have no control over. And so, if you're a Bitcoin diehard or
Mark
you're a
Yusko is going
gold
to be
diehard,
real upset.
say that again.
I said Mark Yusko is going to be real upset, Dave. Do you remember that?
Yes.
1%. You're not a fiduciary unless you have at least 1% of your clients in Bitcoin. We'll see.
Yeah, I mean, and I would say what's awesome about gold bugs and what do they call them? Maximalists?
Yeah,
Bitcoin.
Bitcoin maxis.
Yeah, Bitcoin maxis is they both like to hold or hodl, and they're both super adamant about their particular thing, and they both could be right, and at various points they're both going to be wrong.
It's like
And I wish,
politics.
yeah, exactly, crazy. Like we don't have to like marry our opinions. This is America. We can. Is it not a benefit to have a flexible brain, a brain that can comprehend different things at different times and adjust to the scenario? I'm not here arguing that there's not an absolute truth. There is an absolute truth. For example, I'm a sinner. That's an absolute truth. I need a savior. That's an absolute truth. But as far as like, do I need to own gold or do I need to own Bitcoin? I don't know. Show me a chart and I'll tell you which one I'm going to own. This isn't that hard. The market's hard enough to begin with. Why overcomplicate it? And so I still think it's interesting that you have stocks and gold doing well together, but isn't it awesome that we get to divide one by the other to determine which one we should be involved with? I think that's great.
I do too. More assets to choose from.
Oh, golden age of investing, man. It's fantastic.
Except for they took away our commodity ETFs. Well,
yeah, I was going to say
our K1 free commodity ETFs. Sad.
Yeah, K1 free.
I've grieved enough. Those have been gone. I've grieved.
You know, there's still some out there. It seems like energy's been holding up the best, and precious metals.
They have,
but beyond that, it's not crazy commodity time, and we haven't spent a lot of time talking about the dollar, Ian.
Golly, we talked so much about 104.
Right.
We're below. See, and here's the thing: we got our weak dollar, and this goes back to there's always this market participants get caught in these periods of, is a weak dollar good or is a weak dollar bad for stocks? And then you can break it down. Is it good for this group of stocks, but better for this other group of stocks, and yada, yada, yada. So we're definitely in a weak dollar environment, dollar peak, let's say late June for this most recent downtrend. But then we also had a sell-off. Well, like 6 months ago, when people were begging for a week, I mean, You could have told me this was going to be incredible, especially incredible for small caps, but it hasn't. I mean, yeah, stocks have bottomed here the last couple of weeks, but I don't know. I mean, it just goes back to like, I don't know what the weak, strong dollar means for anything sometimes.
Yeah, correct. There's things that go in correlation, out of correlation. There's no
Gold for good.
guarantees. And
Been gold for good. Hasn't been gold for
yeah,
Bitcoin though. Good for Bitcoin though.
no. Yeah,
So
you would think,
like, what's so explain that?
right. We've got a half a month of a well, maybe a little bit more than that, of a weak dollar, right? We go back to the end of June, right? So more than a month and a half of a weak dollar. Why has that not materialized? The Bitcoin's not really done anything during
No,
that.
hasn't done anything. Hasn't done anything since March. It's been sideways. Now, when I say sideways, we're in a 40% range. So let's keep that in context. It is high beta. It's a high beta range. But yeah, the dollar weakness, which everyone begged for, has really shown up in gold. I would say precious metals in general,
I
not
agree.
Russell 2000 and not Bitcoin.
Yeah, for sure. And like you said, precious metals, and not even in industrial metals. Your aluminums, your tins, those have
Copper's,
weakened against the dollar as well.
yeah, look at copper.
And I mean, it is worth noting copper weakness. I'm not sitting here ignoring copper. I think people are familiar with us on this podcast. Hopefully, you are. That there's no such thing as a market that checks all the boxes. There are times where the market sets the table. And again, this has the sense of setting the table again,
Mm-hmm.
meaning we had a breath flush, we had a VIX spike, we have
Copper
a
went down to,
flush.
yeah, went down to
Yes.
$4.
Yeah, you got copper and a flush.
Mm-hmm.
You had a spike in the put call ratio. You had premium spike for, optionality. Is this really where you're gonna this isn't one of those momentous occasions where you say this is where the bottom falls out.
Well, I mean,
The
what, 2 weeks ago, you were on the podcast. You're like, is this really where you're going to short?
Right.
And yeah, that would have been horrible to sit. Right now, right? We only get the price that we get. But yeah, it would have been a bad decision.
And so it's not as if, for example, we don't have a bullish percent sitting in X's in the 80s and 90s
Correct.
where everything's been
Right.
everything's been participating to the upside for months on end. We don't have an environment where the VIX is completely collapsed into the 12s. I'm not saying it
What
hasn't
what would
crashed.
be your most recent, like January 2018?
Right. Yeah, like January 2018 or even like late 21,
Yeah, I was going
early
to say late
22,
2021. Yeah.
right? Where
And
everything had
even
participated.
that, you had Brett fell off. Remember? Brett fell off in like February, March.
Right.
And
But
so
we did,
even that wasn't perfect.
but isn't that the last time we reached 80s and 90s in
Probably.
bullish
Yeah.
percent?
Yeah. Late 20.
So haven't even had a move of participation that's gotten extended. We've had fits and starts. We've had breath thrusts going back to, November of last year.
Yeah. Last spot in the low 80s was late. I mean, really late 2020. You were diverging. I mean, even into late 2021, you were in this like 60s for bullish percent.
Right. But you had reached the 90s before that.
Yes, you had. Yeah, you had.
Yeah, and so you had this massive expansion in breadth. We saw the start of the race back in October, November. We haven't seen this, and some might be like, "Well, that's actually a negative." Well, I'm not sure yet because we continue to make higher highs and higher lows. We have rising 200-day moving averages. We continue to have these breadth resets. We haven't had this move, and the table is set for late this year for that to happen. That you could have this massive expansion where everybody's going to get involved, right? You're going to have this October, November, December, January, February, March 6-month period where things are gangbusters. It's easy, things are expanding, And that's when you should be getting narrow. That's when you should be getting back to the index. We haven't had that yet.
No, I think we're
I'm,
still kind of in this, like, we're nickel and diming it down the field. No,
yep.
but we're not in a spread offense 5 wide. We're not in air raid trying to pick up 20, 30 yards. We're still scoring touchdowns, but we are doing it in an efficient. We're picking up 5, 6, 7 yards, and we're just advancing. We get, like you said, we get the breath thrusts, and they seem to come just when you need. They seem to come on a 3rd and 9, to be honest.
Yeah.
But we
Yeah.
get them.
And that's what good teams do.
Yeah.
Is they convert. And so you have this market environment where, and again, it's important to paint context. August and September are notoriously weak. We still have that at our doorstep.
We do.
Our bullishness in this episode, please don't interpret it as near term. It's more long term. Very healthy, the auction process that happened the last 2 weeks helped raise the point of control of the market. It proved that buyers were willing to buy stocks at higher levels. Very constructive. You could see that auction process continue for another 45 days or more.
And
We're
I
in
don't
this
even know. Go ahead.
I was just going to say in a sideways range that exists between 5,100 using round numbers and 5,650 on using S&P, that you could be range bound for 2 to 3 months here, while frustrating would be perfectly normal and frankly awesome to set up the final part of the year.
And here's the thing: when we look at our August, September correction, like, I don't even know. I mean, it's super in line with what you would expect. If we go back to our no incumbent election
Right.
year seasonality, which we've talked about on here. I believe we put it in the client letter 2 months ago. So yeah, and then to use your phrase, like, we're still not out of the woods. We haven't got to new highs yet. We absolutely could be building a range with, 2 Mondays ago as our low. It's
Well,
certainly
and 5,400 probably could be revisited again and be perfectly healthy to go see, are the buyers real there? Right? We gap below that level, surge back above it. That's information,
yeah.
but also perfectly normal to go see, are the buyers real there? And meanwhile, you see the leaders continue to lead, NVIDIA and Eli Lilly. I'll just give those 2 clues. We have more than that to look at. And then you talk about the things that you highlighted, Ian, with some of the value that's percolating underneath the surface with financials and some of the high risk areas like biotech. And we didn't even get it. I mean, we're up against our time here, and we haven't even talked international yet. And there's things there where you say, okay, that's not risk off. I mean, goodness, we haven't talked China in forever, and you still have Argentina and
Argentina,
India sitting there.
India, for sure. The two. Yeah, China's held in. I mean, China's trying to put in a base.
When you look at 2 of the largest ADRs, you know, PDD and Alibaba, and then you
BD has
look at
done up
Melly,
pretty
which is
well. Yeah.
Argentina. I mean, the table continues to be set for further upside in Q4. Time will tell. I mean, if we're back below 5,400, if we're below a 200 day, we'll change the tune of this podcast. That's fine. Not a problem. We'll adjust. Not married to our opinions. But as you're fond of highlighting, there's plenty bricks in the wall of worry, whether it's the yen trade, rate cuts, the yield curve, politics, civil unrest,
The yield
open
curve, man.
presidential candidate field. I mean, international unrest. There's plenty of worry, and the market just continues to climb. So, with that, Ian, up against the end of our time, anything else? I want to make sure that you're heard. Anything else you wanted to highlight for our listeners before we ask them to give us a high ranking?
No, 5,400 is the, call it, intermediate term line in the sand. I still think your long-term lines are the same as they've been for months, 4,800 and a 200-day moving average. So the march continues on. And like we said, hey, the growth versus value trade, if that's what you are looking for, it's different depending on where you want to look on the market cap spec.
I think that's such a good point.
Which
Uh,
could be some clues.
yeah, I think that's one of the main takeaways, hopefully for our listeners, is that if you get too index focused, and you could miss out on some of the things that are happening from an opportunity perspective. That's why we use technical analysis. Why we're so fond of studying supply and demand is it shows us where that strength is, and there are some minute and opportunistic shifts that are taking place that could benefit our clients towards the end of the year. And so, Ian, I appreciate you being on here as always. Thanks for dealing with my cold. You've covered the times I've muted the podcast very well, and I appreciate everybody that listens. I hope you guys share it with your friends, with your family. Give us a high ranking. It's the one way you can pay us back for providing what we think is useful information to you. Ian, thanks again for being on here.
Have a great weekend, everyone.